It's time now for Futures in Focus. We are watching gold once again as the rout rages on. Gold futures are retreating for a 10th day in a row. That's the longest run of losses since 1996, and prices have fallen every session going back to July 9th. They're sitting at their lowest level in more than 5 years. And as the Fed prepares to finally raise interest rates, could bullion continue to fall further out of favor? Joining me from the CME to discuss the precious metals' next move is Bob Iaccino. He's chief market strategist at Tethys Partners. Bob, after this incredible downward run that we have seen in gold, is there a floor anywhere in sight?
Well, support and resistance is very interesting. I think a lot of times people are looking for a floor to potentially buy and accumulate things, and that may work in something like an Apple or a dividend-paying stock. But in terms of gold, when you see something rise as quickly as it did since 2007, you know a move like this is coming. I'm right now targeting 1,000 as everybody else is, but I'm targeting as low as 850 sometime in the middle of next year because I just don't think the case for gold is there any longer. I was having dinner with my friend Art Velasquez from Baja Foods here in Chicago, and he actually asked me about gold, and it's been so far off my radar screen lately that I thought he was talking about the corn tortillas that his company makes. I didn't even think that anyone should be investing in gold at this point, not as an investment anyway.
And so, I mean, is there any investable, sort of actionable investment to be made? Do you short gold at these levels? Do you just, as you say, kind of forget about it and look at other stuff?
I think you forget about it for now. There's two things to me that you do with gold. You either buy it for a trade, which is what somebody like I would do, because you think it's going to pop 5 or 10% when it reaches that $1,000 level, which it could. But there's going to be a lot of holders of the gold ETFs that are going to take that opportunity to sell because they missed this last down move. That selling out of, or rather that lower amount of purchases from the Chinese central bank caught a lot of investors by surprise. The futures were sold pretty hard. So you don't want to short it. You may want to get out of longs that you already have, or you want to accumulate the actual physical metal as we get down into that $850, $900 level, meaning coins or whatever else an investor can do. You're either buying gold for a short-term 5% pop or a doubling of the price by 2020. Those are the only things you can do with the metal. It doesn't produce a dividend.
Do you see any opportunity anywhere in metals futures right now?
I like copper in the ultra short term because I think it has an opportunity to bounce in a much more strong and sustained way than gold if the economies can rebound globally. What you're seeing in the world of global QE and dollar strength that's potentially coming with the Fed rising rates is you're seeing the potential for down the road. One thing we know about QE is it helps in boosting asset prices, but is a lot slower moving in boosting the physical economies. I think copper would benefit if they're more effective in China and Japan and in Europe than we were here to boost the actual industrial sector.
All right, Bob Iaccino of Tethys Partners talking to us about futures on metals this morning. Not much optimism in gold expressed by Bob or really anyone else at this point.